Mark, I believe you feel that we got some things out of context about what you were saying to the Redditors?
Yeah, I wasn't telling people to buy more at all. In fact, I said, look, any of us who have traded long enough have been through the pain of making mistakes, and the key is to learn your lessons. And if you're going to hold the stock, if you can afford to hold it, I'm not a fan of selling into a diving market. And so I told them, if you can afford it, to hold on. But I certainly am not encouraging anybody. But, that said, I am a fan of what's going on with WSB, and I like the idea of this collective buying, and I think it could really have an impact on the markets in the future.
GameStop is halted, we want to mention. Mark, here's my concern about some of what I see happening out there, including on Wall Street Bets, is there are people saying, hey, hold the stock. Here's why you should hold the stock. No matter what happens, it's going to go higher. It's not clear who these people are, their real identities, what their track record is, what stake they have in this, whether they're really holding or if they're dumping it. I mean, I'm all for the retail investor in this situation, and so often, Mark, you know this, we see these cycles where the market gets really high valued, retail investors get in, they're trading, maybe even day trading, things go down, then they get disillusioned, they go away. I don't think that's good for retail, and I don't think it's good for the market either.
Yeah, I look at it differently. I think 25 years ago you would have been absolutely right, because it was more difficult to acquire information. Now the information is so readily available, and obviously it's supposed to all be public information that we all have access to, and no one's supposed to have an information advantage. And so I think, groups like Wall Street Bets, aggregate that information in some cases, and you can be a smart investor and still be a small retail investor and still, become part of this unwired network that buys together. I get your point that we don't know who's making these recommendations, but you're not looking at one individual or 5 individuals acting as an analyst and trying to give themselves some authority. You're talking about, millions of, not millions, let's just say tens of thousands of people who are posting. And the information on Wall Street Bets is just one source of information. But it's just, kids today, a younger generation, look at things differently. And I think what's really altered my perspective on it is what's happened in the crypto market. Hodling, hold on for dear life, has worked for a period. Maybe Bitcoin, Ethereum, etc. will go down again. But at the same time, we're starting to see the evolution of applications on blockchain that are really starting to build marketplaces. And I think younger kids, Gen Z in particular, maybe younger millennials, have a different approach to, how they look at stores of value, how they look at how assets are priced than we looked at traditionally. And let me just add, look, the narratives that we create to sell stocks, price earnings, right, discounted cash flow, those are all subjective. We just have been told by Wall Street that if the lower the price earnings ratio against your growth rate, then that's an indicator that the stock's going to do great things. Or Graham and Dodd in terms of asset valuation. And, that doesn't necessarily hold in a digital environment in the same way it did in the past.
So that's really interesting, Mark. By the way, we had a halt on GameStop, limit up, and it's just now resumed, as you can see. So are you saying that the millennial generation and the way in which technology's caught up to trading is going to make Graham Dodd obsolete? I mean, those metrics have lasted for generations for reasons, Mark.
Yeah, they used to trade salt for gold, too. Things change. I'm not necessarily going against Warren Buffett and Graham and Dodd, right? Because, what Warren Buffett can do is actually come in and buy a company, take it private if it was public, and monetize it in a different way. But how people value assets is changing in a low interest rate environment. And, we're looking at stocks because we've seen what's happening in GameStop, and that's, we have that second by second pricing. But look what's happened in other alternative assets, trading cards or digital trading cards or artwork, and we celebrate when somebody that we presume is smart comes in and pays some incredulous amount for a piece of art. We celebrate when, that Michael Jordan rookie card has gone up, 700% in a year or less. And we don't just presume that the people who are buying trading cards are just, dumb investors who don't know what they're doing. In a zero interest rate environment where access to buying assets, trades are going to happen.